but I can't begin talking how bad the market breath is today. Within the F&O universe itself, you've got a count of 208 standing to the declines, with just 8 names standing to the advances, namely the ones that I just read out. But look at the knock on a BSE, that's down almost 11% right now. MCX is down 8%, Granules down 7.6%. Jubilant Foodworks now staring at almost a 7% fall. And then you've got an Oil India as well, which is down a good 6.5% as we speak. Good time as any then to bring on board our experts and find out how much more pain before we see any sort of stability kick in. Nishal, hi, afternoon. Your thoughts? I mean, one thought that, if the US markets were to fall, maybe we're going to fall a little less. We've already fallen so much. Clearly doesn't seem to be the case.
Hi, afternoon. Thanks for having me. I think we are very close to the bottom, or that's what my thought remains to be. Basically, I'm becoming constructive on the market now. So you see, basically, there are 2 or 3 things which I would want to highlight. One is obviously beginning January, we have seen the government is becoming very constructive on the economic front. So whether it was the tax rate cuts, whether it was the interest rate cuts, or recently, basically, the spending which we saw in December and January, the figures have just come out from the government side. So I think all these three things basically are positive for the economy. On the other hand, basically, market has corrected almost around 10-12%, and the stocks are down 25-30% from the top. So I'm saying this is a very good time, basically, where it is looking like basically that this is a constructive time. You should go out and start looking out for the stocks, basically, which you have always wanted to buy, and maybe start adding to your portfolio.
Nishal, that's the question that everybody is been asking about, that where's the bottom? Good to know that you are now becoming constructive, but help us understand that which are the sectors that you are eyeing at this point in time, because if you can talk stocks, the best. If not, at least pinpoint the sectors that are looking good to you right now.
So I think after a long time, I think banking has started looking interesting. It has underperformed for the last 4 or 5 years. But if we really look at it, even in this whole fall, I think Nifty has not gone, Nifty Bank is not down or hit a new low. It's holding on its own. But I think what's really happened is basically that the government has become constructive on the banking side. So interest rate cut first, then almost $1 billion or $1.5 billion worth of liquidity getting injected. And on top of it, now they have cut the risk weightages. So I'm saying it's very, very clear that the government has realized that for 5 years they were they wanted to control the liquidity. They have done that. And now it's a time basically to let go so that the economy once again starts doing well. So I think this is a very, very constructive phase. So I think banking is one sector basically one should look at. Consumer is another one. Basically, we have started seeing some first signs of recovery on the rural side when we speak to a lot of companies. Rural seems to be now reviving with the government's intervention and good monsoon. So I think consumption looks good. And there are certain other sectors basically which have not done really well over a period of time. I think chemical seems to be one of them, basically where I would go out and start looking for. So I think these are 3 or 4 sectors basically which I would start looking constructively on.
All right, but Nishal, when you talk about consumption, if you can pinpoint any of the themes that is looking attractive to you, because when I see some of these jewelry stocks, they are not holding up. Some of these auto counters, they are definitely in the reverse gear, at least for today and for quite some time now, when stocks like Tata Motors are getting hammered. And other than that, help us understand that where are you finding opportunities?
So I think one of the sectors basically which I would look out for is the FMCG, because I think rural is largely, once again, the first impact will start happening as far as rural is concerned on the FMCG side. Stocks have corrected, I think almost all of them. And once the recovery starts happening on the rural side, you will start seeing basically the consumption coming back onto the rural side. The discretionary consumption, basically, we have to see what is going to be the impact of this rate cut. I have started seeing basically that the rate cuts, besides the rate cut, the income tax cut, I think that is putting a lot of money into the hands of the middle class, the upper middle class and the middle class. And I think that should drive the discretionary purchases. But we are going to see it maybe a quarter later. But what we are seeing at the moment is the rural side, and that should be helping the FMCG company. So within the consumption basket, I would actually focus on FMCG at the moment.
Interesting. Nishal, hold on to that thought. Lots more to talk about with you. And we'll talk about where the valuations for these FMCG plays have actually settled in at, and perhaps get in some stock ideas too. But after this very short break.
Welcome back to Right Here on Closing Trades. What we see in the markets is a mild recovery coming in for Nifty Bank, at least from the day's lowest point, and stocks like Bandhan Bank, heavyweight HDFC Bank, as well as AU Small Finance Bank and Axis Bank that are seen to be taking the lead. But definitely the shade of red still continues, not just on Nifty Bank, while no substantial recovery what we are seeing for Nifty 50. But where are the markets headed? Let's try to find out that. And we are being joined by Jay Bala, Chief Market Technician at cashthechaos.com, as well as CA Rudramurthy is also with us on the show. A very good afternoon, gentlemen. And Jay, I first want to have your take on the markets, because nothing actually has been holding up in this sort of a market. Tell us, how are you seeing the markets? Because till now, we have been just talking about the broader end of the market drifting into that bear territory, while when it comes to Nifty 50, it's just 4% away to have that 20% correction. Do you believe it is too soon to call it a bottom?
Yeah, hi, good to be here. We don't speak that often, Srishti. And see, I interacted with Anisha sometime in September, October last year, and I mentioned that Nifty is set to correct to the June 4th low, the post-election drop of 21,280. And that's where the market is headed. Yeah, you're right. Never stand in front of a moving train. The momentum is looking quite strong to the downside. And although 22,100 is a important support, I think the market's most stronger support is probably coming at about 21,800 to 21,280. So it looks like the selling could be very close to being done, but we don't want to preempt the market. Let the market tell us that it's bottoming out in form of a reversal signature. Until that point, it's a little bit too early to call for a bottom.
Too early to call for a bottom. Rudra, what is your chart telling you right now? Are you feeling the same? And where is it that you actually see any sort of support come by?
See, in fact, a lot of jokes are moving in social media. The daily support is at 3:30 p.m. In fact, one way around, definitely markets are catching momentum on the downside now, and having broken 22,800 and also 22,400, and there is no oversold territory whatsoever, and markets are seeing daily sell-off. Also, advanced decline ratio is so bad, and we are seeing mid and small cap stocks just selling off. So for me, when it comes to index, Bank Nifty is definitely outperforming Nifty, and for me, Bank Nifty support now emerges closer to around 47,000, and Nifty should be somewhere at around 21,800, where we might see some amount of respite. But however, mid and small caps, the selling should continue, and we should be very sector specific and stock specific in this market if you want to be on the long side, and even if you want to build a portfolio for a longer horizon. Definitely, these are great opportunities to buy, but still stay with mega large cap and large cap stocks. And especially when it comes to sectors, look at sectors like private bank, chemicals for that matter, metals. So there are a lot of good stocks available here for your long-term portfolio, but still focus on large cap than on mid and small cap. Nifty is headed towards 21,800 first, and Bank Nifty towards 47,000.
Interesting. Nishal, that's the thing, right? I mean, you were talking about safety in banks right now. That really seems like a consensus trade, but consensus doesn't really make you money. Given that a large part of the market is looking, pretty attractive right now, the valuations have come off quite a fair bit. Other than chemicals, where within mid and small caps do you find opportunity for a better, alpha generation in one's portfolio?
Is that question for me?
Yes, Nishal, for you.
So I think we should stick to the sectors which we are talking about, and basically where you find comfort as far as valuation is concerned. I think that's where you should be heading towards. So not necessarily you want to look at a mid or a small cap, but if that mid and small cap is corrected enough and you are feeling comfortable about the valuation, I think you can look at the mid and small caps also in those sectors. So as far as banking is concerned, I think across the sector seems to be very interesting. And from the, though I don't understand technicals, but from the technical side, basically they have not performed for the last 4 or 5 years. So I think they seem to be in a good position.
While we do note that you are refraining from just calling it a bottom and you don't want to time the markets right now, but at the same time you also believe that we could be near to those bottom levels. Help us understand what exactly in terms of the indicators will you be watching out for to actually call it a reversal, and also which sectors can actually participate at the first in this sort of a reversal you believe?
I think there are pockets which are actually even breaking out as when the markets are hitting fresh 52-week lows. If you look at something like an SRF, it hit a multi-year high. It's consolidated between 2021 and 2025 and reached fresh record highs and pulling back. That looks bullish. So as from a sector, I would think that SRF being in specialty chemicals, that might be a pocket you want to keep your eyes on. But it's the rest of the stocks within that space is not showing signs as SRF is doing. So that's an important space. And but there are more ominous signs that are coming for the market rather than positive signs. Because while HDFC Bank is counterbalancing the weakness in SBI's drop today, if we don't want to see HDFC Bank drop below 1620, if it were to drop below 1620, that will cause a bigger drop for the overall markets because it is 30% of the banking sector, and the banking sector is 28 to 30% of the Nifty. So, and the Nifty IT sector, which was holding on until last several weeks, that's breaking down significantly. And the US techs also pointing to an important trend change. So there are more ominous signs there. So, this is how I'm looking at the market. The sign you asked for would be the markets to turn from a significant support. 21,800, just like Rudra pointed out, is also my important support. But 21,280 has been my focus since the 1st of October. And one of these two levels, if the markets were to reverse in a very strong fashion, then that will be an indication of a strong counter-trend bounce or a reversal. We need to look at the markets closer on an hourly to intra-hourly time frame and then come to a conclusion.
All right, but other than that, when you believe that the breadth of the market is not looking that great, Jay, also help us understand that which sectors are even now looking more vulnerable to some more correction.
Yeah, autos, banks, FMCG. I had put out a note in October that the FMCG sector has possibly clocked multi-year top. So you need to be very careful there. Avoid FMCG and treat them as just trading plays if you get opportunities. Autos being the market leader, the markets are not going to bottom unless the auto sector bottoms. So auto sector is looking quite vulnerable. Mahindra & Mahindra was the strongest within that space, but post the Tesla negotiations and probably because of that, the tariffs coming down for it, that is also starting to look weak. And without the auto sector turning around, I don't think there's a bull market in India. So watch the auto sector as a very important turnaround candidate, and that's still an avoid at the moment.
Okay, profound statements there. That's the word coming in right now from Jay Bala. But Nishal, would you want to, counter that? Do you think that this is a structural reversal, or do you think we've still got an intact bull market? And yes, it is a deep correction, which has been part of any historical bull market as well.
So frankly, I do not understand technical. So I'm not be able to say whether it was a bull market or a bear market. What I was just trying to say is that at these valuations, you are becoming more constructive in the market. And the major worry was basically on the valuation side. I think that has been a good correction. government policies are supporting at the moment. Yes, we have an issue basically as far as the global economy is concerned, the tariffs and all. But I think that is now seemingly getting priced in pretty well. Now, will it go another 1,000 point lower or 500 point lower? I have no idea about that. But at these prices, would I be nibbling in the market? Definitely. And those are the sectors basically which I had said, which I believe basically fundamentally the support has started coming.
Shivangi, hi, afternoon. What's your market strategy right now? Still focused on selling, or do you think it's time to bottom fish now?
Good afternoon, Aisha, Shrishti, and everyone in the panel. Thank you for having me. So we've seen that market has been in pressure and continued selling pressure continues over here, even though there has been a minor pullback move, but then we'll have to see how sustainable it is because call writers are increasingly strengthening their positions at the higher zones. So rejection is there. So first on my radar is a sell call on emphasis. IT stocks have been, taking everything with a pinch of salt, and we've seen that the weakness has been persistent here from the last around about 5 months with a breakdown on the monthly basis now. So volumes and price is confirming that there is weakness which could persist here. On the daily basis also, we've seen that the key exponential moving averages have been broken. With of course weakness in the entire space, we could see more weakness over here. So recommending a sell here with a target of 2150 levels and with a target of 2150 levels with a stop loss of 2290 zones. So second pick on my radar is Indigo, which is witnessing resilience and strength even despite the market weakness. And this sector has been one such which has been relatively stable as compared to the other packs. And Indigo specifically is forming a triangle formation on the monthly basis, a narrow range, which is it's getting ready, to come out of this range. And even on the weekly basis, we've seen that the hurdle zones have been surpassed and stock is holding near its higher zones of the band, which is indicating that strength will continue here. So recommending a buy here. Now, the next targets that we're looking at is around about 4650 over here with a support of 4370 levels.
Those are some of the stocks that you can look at this point in time. But with this Nishal, we'll let you go on that. Really appreciate you taking the time out and speaking with us and also highlighting some of the stocks, some of the sectors rather, that you like at this point. But Jay, the other sector that I wanted to touch upon with you is the PSC index, because nobody is actually talking about it. Forget about the fundamentals. On the technical front, what I see is the 7th consecutive month of decline coming in. And it is actually heartening to note that in the first half of 2024, it was one of the darling sectors. In the second half, it was a brutal sell-off, and that still continues. But Jay, what are your thoughts on the same? Do you believe that there's more pain left?
It might be a short-term bottom that's due. I don't think it could be a long-term trend reversal. I'm looking at supports for the Nifty PSC index at about 7,800. There is momentum, positive divergence for the sector. So possibly we could see a reasonable bounce, say somewhere close to 8,800. But we need currently it's not showing signs of reversal, but there is a potential for it. But as I said earlier, it's likely to be a counter trend bounce rather than a trend reversal.
Jay, you're not looking at any buy indicators anywhere, right? Because going by your view, it seems like there's definitely more pain and pretty much across the board.
Yeah, barring specialty chemicals, I'm not looking at anything else. And even in specialty chemicals, SRF, I wanted it to drop a little bit lower for it to come to reasonable support. But that's particularly, somewhere around 2,500 change. So even there, that could be a 10 to 15% drop before it turns around. So most of the sectors are looking negative, even with this kind of beating down. Usually markets bottom with some kind of distress selling. Whether this is or not remains to be seen. The jury is still out. But there is still time for the markets to give us a buy signal. And bottoming is a process; it's not an event. Whereas the top, when the market forms the top, it's generally an event. So even if the market were to bottom, it gives you sufficient time as the process happens. So there will be a sufficient time. So it's better to be outside the market and thinking that it's better off rather than be in the market and wish I was outside the market.
Interesting. Okay, just stay with us. I want to definitely talk to you about what you're seeing on the charts for the US equity markets. But let me quickly get in some closing ideas too. Rudra, what's on your list?
See, two sell calls. One is a sell on BHEL. It has broken crucial support, which was at around 185. So having broken decisively 185, stock is headed towards 165 zone. So one can sell in futures with a stop loss of 185 for a target of 165. And also for me, Crompton shows a very, very clear weakness. Open interest is getting added on the negative side with stock prices coming down. And again, it has broken crucial support at 330. So having broken 330 and staying below that, Crompton is again a sell available in futures. So take a sell call on Crompton for a target of 310 with a stop loss of 330. So sell on BHEL and Crompton.
BHEL and Crompton, clearly from our chartist, it's a sell bias today, no wonder then. We'll take a very quick break. By the way, Europe also has started off on a very weak note. Most of those markets too are bleeding as we speak right now. You've got about 0.5% to a flattish move coming in with a negative bias across the European markets too.
If you like this video, then like, share and subscribe to ET Now.